In this video, I want to talk about one of the first trading strategies that I am learning as a pure beginner. So I'm going to break down how it works and how I am currently doing it in my paper trading account. So my name is Tyler Stokes from StokesTrades.com. I am on a journey to become a full-time day trader, and I'm at the stage now where I'm studying strategy. So if you've been following along, then you'll know that I have a 6-month blueprint that you can download below this video, and it goes into everything that I've done in the first 6 months of this journey. And there are links to all the resources that I've been using and I've been learning from, and you can go and download that for free. But I'm at the stage now where, I know the basics of the stock market, buying and selling stocks, technical analysis. So I need to study a strategy. And I mentioned in the blueprint that one of the first strategies that I came across was from the Real Day Trading Reddit group. And they have a wiki. You can come to their Reddit group. You can download it for free. It's a large document, and I am progressing through it. But along my journey in the first 6 months, I also found a trader called the Great Matsby, and he has a course with a trading strategy that I sort of am leaning towards a little bit more than the wiki. I have a limited amount of time right now, and the time that I do have, I seem to gravitate towards Matt's strategy and focusing on that. So I did mention that Matt had a course. He no longer has that. He just has a Patreon. So you can find links to Matt and his X account, his YouTube channel, and his Patreon below this video. So, I'm learning from him. So me describing in this video what I'm learning, certainly I'm still a beginner. I'm not very good at this yet. So if you want to go straight to the source, then the Great Matsby is who I'm studying from. And there's also another person called the Cantonese cat. I think he has great analysis as well. It kind of goes side by side with Matt's analysis. He sort of had a very similar type of trading style. And he's got a YouTube channel that you can join for, I think it's $5 a month with some great content there as well. So that's the source of the information that I want to share with you in this video. And again, this is a strategy. It's more of a position type of trading strategy. So there's day trading, which we're sort of focused on here. There's swing trading, which, so day trading, you're buying and selling within a single day, typically. Swing trading, you might hold a position for a couple of days or a couple of weeks. And then there's position trading where, you're buying for several months or maybe even longer term. So this strategy mainly focuses on more of a position trading. However, you can also trade with it on a lower time frame, like a daily chart. However, the Great Matsby tends not to day trade. He sort of does more position types of trading. That's sort of what I've been doing as well. However, you can use this as a day trading method, but typically it's more of a swing and a position type of trading. So if you're a beginner and you're sort of getting started, you're going to come to this point where I was, where you kind of feel overwhelmed with, what strategy do I choose? I know the basics of technical analysis, but what do I do now? And fortunately for me, going through some teachings from the Great Matsby and just watching some of his analysis on X and on YouTube, he's got a lot of free content as well. I've sort of come to the stage now where I can look at a chart and I sort of know what to do. So it's a great feeling, and things are sort of coming along for me, and I'm learning much more. I'm going to share with you in this video exactly what this strategy entails from my perspective. Again, go right to the source if you need to. So that's what we're going to cover here. So again, full disclosure, I am learning this strategy from the Great Matsby and the Cantonese cat, and you can find links below to their information. So basically what this strategy is involved with, and again, this is my perspective on it, is that it recognizes market symmetry. So the edge of this strategy lies in recognizing market symmetry on every chart. Markets, they tend to move in patterns, repeating themselves over and over. And once you can identify these patterns, you can let the charts do what they're supposed to do without getting too emotionally involved in your trades. And it sort of feels like a bit of a less stressful type of trading. And we're going to go through some examples once we get through, how this actual strategy works. We're going to run through just one example of me looking at a chart. So we'll see some examples there. So the more you study and apply this, and I've been experiencing this, the more you can kind of see that every chart follows like a sort of rhythm, allowing you to trade, with a bit more confidence as a beginner. So I really do feel like this strategy is good for beginners just to learn even more about technical analysis, market structure, and everything like that. So some of the ways that it works in terms of actual trading is you basically, the strategy is built on a few key components, and they all sort of work together to give you tools and insights needed to make informed decisions. So there's a lot of confluence that is needed. So you check various tools, various timeframes, and then you get confluence and conviction that a stock is going to be either at an area of support or a back test after a breakout. So one of the fundamental components of this strategy is that you buy at support and then you sell at resistance. So when a stock is reaching a support level, a lot of people tend to be scared in those situations. A stock is falling, but when it's reaching an area of support where there's a lot of confluence that it is support, that is a signal that you should buy because the stock is going to rebound. Now, the other component is when there is a breakout. So if there's a big bullish engulfing candle and the stock runs up and breaks through some resistance areas, and then in a few days or a few weeks it comes back and back tests a support level, that's also a signal that it's had a breakout, it's had a successful back test to a support level, and it's going to continue higher. So those are sort of the main two types of components of this strategy. And I think it's easy to understand those two. You buy at support and then you buy at a back test after a breakout. Now, with the bull market that we are in right now, dollar cost averaging can be used with this strategy. So a stock might be falling down to a support level and you can buy in at that level. And if it continues to fall down to a lower support level, you can sort of dollar cost average down into that support zone. And in a bull market, this is recommended because, eventually it's going to turn back up and go higher and up and to the right. Whereas if you're in a bear market, you probably don't want to do the dollar cost averaging down because you might be in a situation where the stock just keeps going down and down. So in the bull market that we're in right now, you can dollar cost average down. And then once your stock hits a support level and starts to rise, you can also dollar cost average in to that trend. So sticking with the trend, buying the trend, and riding the momentum up is also something that's done in this strategy. Now, this strategy also emphasizes being really patient and not over trading. And I think for beginners, this is very difficult to do. Personally, I've got a paper trading account and I just want to, buy and make all these trades. And, that's kind of good for testing the strategy out, just buying some and seeing what worked and what didn't. But when you have real money, you don't want to chase. You want to let the prices and the stock come to you, but it can be very difficult. You have money on the sidelines and you just want to make money, and you sort of force yourself to trade and you tend to overtrade, and that's really, really bad to do, especially with this strategy as well. So patience is really crucial. Many traders lose money by chasing trades or overtrading out of boredom or impatience, and this is something that I see. I think it's relevant to any sort of strategy that you're doing. People want to get their money in and make money, and they tend to make mistakes doing that. So with this strategy, waiting for the right conditions is really important. You really need proper discipline and stick to the rules. And that's really, really key, especially in the long term with when you're trading with real money. You certainly want to preserve your capital and be very disciplined. The other component, confluence between log and linear chart. So if you're deciding or trying to find a support level with a stock, check it on the log chart, check it on the linear chart, use various tools and have confluence that, on this chart, it's showing this as support. This chart is showing this as support. Those are good things to give you more conviction that it's a good entry position. Also, be comfortable with discomfort. A key mental component of this strategy is learning to be comfortable buying when it feels bad. So when a stock drops and a stock starts going lower into a support level, it can be hard for you to buy, but that is really what you should be excited about. When it's dropping, it's reaching a support level. That's a signal that this is a good time to buy, but naturally you're going to feel maybe bad. People always want to buy at all-time highs. I've done that in the past when the stocks run up and it's reached its all-time high. That's when us inexperienced retail traders, we go in and we buy, and then the stock retraces back because that's a resistance level. So inexperienced people buy at resistance, whereas pro traders, they buy at support. But when you're just starting out, it can feel difficult to do that. When a stock's dropped, you feel anxious, you want to sell, but that's when you should actually buy. And in terms of taking profits, you can take profits when you kind of want to. You can buy at support, so sell at resistance. So if the chart is showing you that you're entering a resistance level, you should sell. In bull markets, this strategy also recommends that you just hold on to positions. So, if the stock is running up and it's very strong, it's in a bull market, you might not want to sell and get left behind. So this strategy, certainly the difference between this one and sometimes just day trading is that people that use this strategy are fine with holding on to a stock for many, many months if it's just going to continue to rise. That being said, you can certainly day trade with this strategy in and out, but the great Matsby and some of the people that I've been learning from are happy to hold on to a stock if it's just going to continue to rise up and to the right. So how do you find support levels? How do you find these breakouts and back tests? Well, you look at the charts and you use some technical tools. So some of the main tools that are used are the Ichimoku clouds, Fibonacci levels, the Gann charts, and then just general market structure. So we're going to jump over to the charts right now. Let me just wrap this up. Again, this strategy, we'll call it the market symmetry strategy. It's designed to sort of eliminate any emotional trading by just focusing on predictable patterns and symmetry that are found in all charts. And as a beginner, it's very nice to know that this exists. The more you study this, you'll notice it yourself, and it can help you sort of avoid chasing. Just follow the charts, do what the charts say, and I find it's a very stress-free way to trade. And again, I don't have a ton of experience yet, but it seems that way with the beginning stages of my journey into it. So again, recognizing these patterns, patience and discipline, using dollar cost averaging in the bull markets, and then just trusting market structure and the technical indicators. So basically, to wrap up, this is a powerful approach. It leverages natural patterns in the market, well-timed trades. You focus on supports, breakouts, backtests, using these various sort of tools. So again, personally, I'm using this strategy. I'm also focusing on the other strategy, but I seem to gravitate towards this strategy. I seem to like it better, and I'm enjoying it. I'm seeing some good results, just small results in my paper trading account. So why don't we jump over to a chart and we'll just run through an example. Again, if you want a professional showing you this type of stuff, then certainly just go to the Great Matsby's channel. He does morning shows. He does various videos and free videos, and you can watch his analysis. I'm just going to run through some of the things that I am learning with this type of chart. So why don't we look at a chart called the Coinbase. So this is at a stock Coinbase, and what we have on here is we have a log scale chart. So we can see here I've got the L on, so it's log scale. And we have right here a Gann chart. So in other videos, I'm going to do small tutorials on how to set these up. But basically, in TradingView, you can get the Gann square, and you can go to a pivot low, and you can extend this up, and you put in the proper numbers. And what we're seeing here is that when you put these Gann squares on, and just for demonstration purposes, this particular one is pulled out to 360, and the top is 5. So again, we're gonna have tutorials about what numbers to set up here, but for this example, we've got 360 and 5. And basically, you can see that coin has followed market structure quite well here, market symmetry. So it's sort of reached up to this main level here. So there's this first line that it's risen up to and met resistance. It's come back down and met these angles here as support, and it's risen up to these arcs, and it was resistance, so it came back down to retest this horizontal line, broke back up to this arc, came back down to well, this is a Fibonacci level here, rose back up, rose up to this this angle here, and it's come back down to this horizontal line there. So it has some market symmetry. here. And then what we can also do is we can put on a Fibonacci retracement here. So we've gone from the high to the low, and we've got some Fibonacci levels here. So basically you can see that it rose up to the 786, and this has been a resistance level, and it's dropped back down to the 618, and now it's risen back up and just recently back test the 702. Now, if we also go over for some confluence to the linears chart, we can see we've got a linear GAN here, which is a little bit different, but we can see we've got some market symmetry here as well, and it came back and touched this angle here really well. So this would have been potentially a good time to enter, and then it's risen up here, and it's kind of seen this arc as a bit of resistance, and then it had a big bullish engulfing candle here, and this is on a weekly time frame. So there we've got some confluence that, you know, it's been support in this area. And if we go back to our other chart, we can see that in that area as well, we've got a fib, and we've got this arc here as well. So on September 24th, reached this low here right at this arc. And then if we go back and we just look at this chart here, September 24th, we've got an angle here where it just touched here. So it's meeting this market symmetry and respecting the market symmetry. And if we come further over here, and we can use some other indications, we put on the Ichimoku. So right now we can see that we've got a breakout and a potential back test. So this area 197 would have been a real area of potential support. So we've broken through this fib level, and then the next week we retraced it back. So right around 197 would have been an excellent entry point. And if we also put on the moving averages, we can see here that right at that level as well is the 50-week moving average. So that's more confluence that right there would have been a great potential entry on the weekly chart. So that's two levels of confluence. And then if we put on the Ichimoku cloud, we can see that right here we've had a bullish engulfing candle that broke through, and now it's at the top of this cloud, and it could potentially be pushing this cloud to a level of support, and it might continue to ride the top of this cloud out. So these are a few indications from a GAN square and the standard moving averages, then the cloud here. If we look on a daily cloud too, we can see that here's where we broke down to this sort of level, and now on a daily sort of basis, we've broken above this cloud, and this cloud now is going to be potentially a support level right around the 209. So again, this area was a good area to buy entry. We had that on this particular day where it dropped all the way down, almost met the daily conversion line there of the Ichimoku cloud. So a bunch of confluence saying that this breakout and this back test was a good entry point. We've got the moving averages there. We've got a Fibonacci level that it went down to there, and that would have been a good area of a support, a back test and a retrace, and some good support in that area. So that's just one sort of example of some of the tools that you can use to follow this strategy of using these guidelines for going in and out of trades, buying at support, buying at breakouts and back tests. So if you sort of follow that and you kind of come over to a few other stocks, so there's what you want to do is go to other charts and see if there's other examples where this has happened. And this other stock that we were looking at happened as well. We can see, again, these are weekly. So this week, this candle broke out, broke the simple moving average there, broke through that, broke out of the cloud, and then you've got the baseline from the Ichimoku cloud as well. And then this week it back tested back. So right around $300 would have been a really good potential entry point as a breakout back test. And there's a lot of levels of support there. So that would be a area where you would potentially want to buy right around $300. And again, you can dollar cost average down if you want, but we've got the Ichimoku cloud being an area of support now. This crowd should continue to go up, and it's 309, so you could have got bought in at around 300. And again, we've got a higher low moving up into this trend. So certainly this trend and this stock is looking bullish. And same if we went back to, coin, the overall market structure here is still bullish. These are weekly candles, and we've got a low and just higher lows forming up for this particular chart. So that's the strategy that I'm focusing on now. Again, my analysis of it here is not anywhere near as good as the great Matsby. I would recommend that you get some information from him, and the Cantonese cat also has some great videos. But this is just me documenting my journey. I'm learning more about this. Again, I'm still a beginner. I'm learning more about this, but the more I study charts, the more I approach these trading rules, I'm enjoying it, and I'm seeing more market symmetry across all charts. And things are starting to come along, and I can kind of look at charts now and I kind of know what to do. So that's a really good feeling when you have a strategy and you sort of know how to use it. So I'm going to continue to study this, practice it, study more charts, set up paper trading accounts. And I'm going to continue also to go through the wiki, which is much more of a strict day trading strategy, whereas this particular strategy is, more on the high time frame, more of a swing trading or position trading strategy. You certainly can day trade it as well, but generally it's used for a higher type of time frame. So thanks so much for listening. Check out the resources below and some of the links below, and I look forward to talking with you in the next video.